The Reserve Bank governor has been repeatedly advising banks, NBFCs and Fintechs about the steaming growth in unsecured loans. In fact, Deputy Governor Swaminathan gave the numbers. He said unsecured credit has been growing at 23% over the last couple of years versus other verticals which are growing at 12 to 14%. Separately, CIBIL, the credit scoring company, they point out that NPAs in the category of loans less than 50,000 rupees has jumped to 5.4% as of June 2023 from 4.2% a year ago. Also, the number of persons with 4-5 loans in this small category has jumped sharply. So how serious is the unsecured loan problem? We have with us Krishnan Sitaraman of CRISIL, Soumya Kanti Ghosh of SBI and Jairam Sridharan of Piramal Enterprises. In a bit, later on in the show, we will also be joined by former SBI chairman, Mr. Rajneesh Kumar. Well, let me start with you, Jairam, since you've, earlier in our shows pointed out that you're worried about the growth of unsecured credit. Now, do you think the worries are increasing for you?
Firstly, Latha, thank you for having us. I would say the worries are about at the same level as when I last spoke with you maybe 4 or 5 months ago. I think there is more data now that gives more credence to what we have been thinking about. What we see today is that in the smaller ticket unsecured, risk has clearly started showing. 4 or 5 months ago, this was speculative. Now it is fact. You presented the information on less than 50,000 rupee unsecured loans and how the risk on that has increased a lot. If you go even further down, Latha, the risk has actually gone even further high. So less than 25,000 rupee loans are actually even higher risk. Less than 10,000 rupee loans are even higher risk than that. So essentially, the smaller you go, the higher the risk has gotten. Now, of course, it's expected that small ticket loans will be high risk. So that's not the issue here. The risk is in absolute terms high. The risk is that it has the worry is that it has increased. In the less than 25,000 rupee category, risk today is about 70% higher than what it was 6 months ago. So that's the kind of increase that we have seen. These are small numbers in terms of overall portfolio size for the industry in rupee, in lakhs of crores kind of terms. But still, the fact that a part of the business has increased risk 70% is seriously a cause of concern.
Yeah. Actually, CIBIL shared some numbers because I wrote to them. So this was a reply from CIBIL. They pointed out that the amount of loans which are under this 50,000 category form 0.3% of the total retail loans. Now, total retail loans, according to their previous data, is 90 lakh crore. I think that's as of June. So 0.3% of 90 lakh crore works out to about 27,000 crore. That, even if the whole thing went bad for the banking system, it doesn't look like a very big number. Soumya, your recent reports seem to say that this is not a very big threat. What are your arguments?
Yeah, thank you, Latha. I think that while the concerns on this is well appreciated, I think the numbers do not suggest any alarm as of now, because if you just purely go by the bank credit data, the breakup of unsecured and secured credit, you will find that the compositional shift towards unsecured is actually not correct. It is continuing at 10%. The second important thing is that we recently also did a study of NTC and NTCC. Basically, NTC means those are new to cards. We wanted to see that whether the other unsecured portfolio of credit cards is also doing well. We actually found out that the borrowers who are in the NTC category, basically new to credit, and these are the borrowers, are the small borrowers, actually their behavior mimics a similar behavior of the NTCC customers. So that means that the alarm over the change in a behavior of the small ticket loans is as of now not exactly warranted. And the other important thing which we found out from the data, and it basically shows that the origination standards, I think the unsecured and secured both have expanded from COVID. If you take the data from 21, both have expanded, and that clearly shows in the data. But the important point to you that recently in the RBI Financial Stability Report also, and as you correctly pointed out, it's 0.3% and 98% of the overall loans is more than 50,000 crore. And in the recent Financial Stability Report, one of the important data points which shows that the net shift in the borrowers from one category to other in terms of the better rated was much higher across the upper rated borrowers, basically the prime rated borrowers. And the second thing is that the origination standards, the risk origination numbers, which was last available for March 2023, that shows a significant upturn for the prime borrowers across all banks, including public sector banks, private sector banks, and industry. So in my sense, I think while there may be pockets of some sort of an increase in the asset quality or some concerns on the asset quality, I think overall the numbers suggest that the share of the subprime borrowers in the overall category as per the recent RBI data has been on a continuous declining trend.
Okay. Well, actually, Soumya's report pointed out that new to credit, that is people who are taking loans for the first time, that proportion has fallen from 13.4% in March of 22 to 8% in March of 23. He also points out that subprime loans have fallen, near prime loans have risen, prime loans, prime plus super prime, which are all good categories, all those loans have risen from March of 22 to March of 23, saying that there is no secular trend of poorer quality loans. Now, Krishnan, you have an unenviable task. Jairam was the first to point out that he's scared of unsecured loans. Soumya Kanti thinks it's not. You tell us, I mean, I'm assuming you're the middle ground. What is the CRISIL data saying?
Thanks, Latha, for having the show again. I would say at the outset, I share what Jairam said as well as Soumya said in their own context. Let me start with a slightly big picture view. If I look at the last 2 years or so, how retail has evolved in the banking system, NPAs have actually come down from around 2.1% to 1.4% overall for the retail segment as far as GNPA goes, March 21 to March 23. Within that, if I look at unsecured, there again, the NPAs have actually come down. They've come down from 3.2% to 2% overall NPAs. Then if I do a little more of a drill down, and look at the SMA1 and SMA2 accounts, which are essentially 30 to 60 day overdue and 60 to 90 day overdue, potential candidates for slipping into NPA, they are currently not NPA. So those numbers have also come down for the unsecured segment from 4.2% to 2.3% over the 2-year time frame. Now, that said, if we look at the unsecured portfolio, I think we can split it into certain categories. As you rightly point out, one is the less than 50,000 rupee ticket size. Then we have the 50 to 8 lakh ticket size, I would put it that way. And larger than 8 lakh, I would say, the large ticket personal loans. If you look at into each of these categories, if I see the large ticket category, more than 8 lakhs, I think there, again, the numbers are quite steady and the delinquencies are quite under control. Where we have seen some uptick among some of the players is in the less than 50,000 category in the ticket size, less than 50,000. And we have seen delinquencies and NPAs move up there. And when I look at it in totality, fundamental factors, I would want to look at the triple I effect. Triple I stands for 3 I's, that is interest rate, inflation, and indebtedness levels. So if we look at these 3 factors, if these 3 factors go up, then that puts stress on the repayment capabilities of financially vulnerable customer segment, which is essentially the customer segment for the less than 50,000 category. Now, you talked about 0.3%. Now, when we look at retail, our numbers around 13.5 odd lakh crores for the banks and NBFCs put together. Banking sector roughly 10.5 lakh crores, close to 3 lakh crores for the NBFC segment, and the unsecured space. Probably the 90 lakh crores include some of the SME loans as well. I am looking at pure retail. Now, when I look at that, the sub 50,000 portion is not, less than 2% of that mix. It's still not a very large quantum. Yes, while we see some upticks in the delinquencies that we are seeing in the sub 50,000 segment, that still is not a very large proportion. I am not sure there is any cause for systemic alarm. But if I look at certain players, there would be certain players in the NBFC segment who would be focusing on the less than 50,000 segment. Okay. And I agree with Jairam when he says that as you go lower in the ticket size front, the challenges will go up because the financial vulnerability of that customer segment goes up. if we go back to, say, the demonetization challenges or other challenges like the microfinance crisis of 2010, and even during the time of the COVID, when we had the lockdown, we saw the more vulnerable segments get impacted more. So they are susceptible to the vagaries of the economic landscape. So we need to monitor that situation, part more closely.
Okay. I'll come back to Soumya on this, but Jairam, very quickly, the fact that the Reserve Bank has not imposed any risk weights or provisions, very clearly Governor and DG said it is only advisory. They know something, isn't it? So one need not worry so much.
The regulator certainly knows more than most of us. They have seen all the data in the system. So the fact that they've not taken any action, while it's a little bit surprising to me, I will defer to their better judgment on this point. See, one or two points separately I'd make though, Latha. This fact that it's a small part of the population when looked at in rupee crore terms is misleading. If you think about the fact that when you do NPA recognition in any bank or NBFC, you have to do NPA recognition at the customer level, not at the account level. So if a customer actually goes bad, all the customer's other loans also go back. So what you need to look at in this case is number of people. How many people are there in this population, and you will find that in number of account terms, this is a much larger population than people are imagining. And when any of these guys goes bad, if this guy also has a credit card running or an auto loan running or two-wheeler loan running, all that will also become NPA simultaneously. Second point I'd make is that this reliance on bureau scores, etc., can bite you in the backside. Like we have seen it in prior credit cycles as well. When a cycle turns, the bureau scores don't catch it. Bureau scores catch it after the turn has happened. After guys have gone bad, bureau scores start turning bad. The guy looks good, and then he turns bad.
Point taken, Jairam. Yes, if a person takes too many loans from a fintech, then he will likely default on an auto loan that he may have taken from the banks. So there will be a cascading effect. Point taken, Krishnan and Soumya as well, that at the moment, systemically, it's not a huge issue. Thank you very much for joining us. We have to take a break. But thereafter, veteran banker and now a fintech company chairman, Rajneesh Kumar, joins us. Welcome back to our special Indianomics on unsecured credit. I now have with me Mr. Rajneesh Kumar, the former chairman of State Bank of India and now chairman of several fintechs, actually, like BharatPay. He's also heading MasterCard. His knowledge of banking and fintechs makes him best placed to analyze the scare of unsecured lending. Mr. Kumar, thank you very much for your time. Well, first, the Reserve Bank's argument has been unsecured loan is growing too fast. In many banks, it is growing at 35-40%. Is that reason enough to be worried? Especially because some banks are new to retail, So your thoughts?
Yeah, no, RBI as a regulator, they have a lot of data, and if they are saying something, that will be based on data. So more than the growth, that who is growing at what base, if it is a low base, then obviously the growth rate would look 30%, 40%. If the base is big and on that you are top of it growing at 35%, then it's a different. But as a portfolio strategy of any lender, they should have a portfolio in mind. That how will their portfolio look like? What is their risk appetite? And in that portfolio, what would be the percentage of secured loan, unsecured loan? What would be the percentage of corporate loan? And then there is something called risk-adjusted return on capital. Obviously, on housing loans which are fully secured, the spreads are low. When it is secured, so is the case with the credit cost, which for most of the portfolio would be less than 1%.
Yeah.
Unsecured loan, obviously the credit costs are high. So this is also an issue around that how these loans are priced. But as far as the RBI is concerned, if they have certain data, the statistics and about certain NBFCs or banks, if they are going too fast for their comfort, so it's all right. RBI can put a lot of caution.
Okay.
And the other thing,
One of the bankers said that, some banks are even lending personal loans for 7 years. Normally, personal loan tenors are shorter. Is this what is scary?
that I would agree. That personal loans and debt to unsecured are not given for long. They are by nature short term and recoverable in EMI and now EDI, equated daily movements. Like we have moved from EMI to EDI for smaller loans. So one thing I am very clear about any bank or NBFC or any organization, that one should not do a business which they don't understand or have not created capability to handle. So personal loans, if you are doing, say, for example, manually, or if you are not fully digitized, you don't have digital analytical capabilities, you don't have control over the cash flow, then it is a different type of risk which is building in the book.
Yeah, so this under 50,000 crore, under 50,000 rupee loans, that is what CIBIL is pointing out is showing greater delinquency. And, do you think fintechs are the problem? Because because of buy now, pay later, they are giving 3-4 loans. There are people with 3 or 4 loans at the same time. Is that what the Reserve Bank needs to look at?
No. Of course, Reserve Bank as a regulator has to ensure that there is no systematic risk developing as far as the loan portfolio of banks or NBFCs is concerned. And they have to be taken with a lot of respect. If they are saying something, I have found that when RBI says something, they do it on the basis of certain data and their assessment is generally correct. So that is one. But also at the same time, about the growth in personal loans, a lot of banks have done rebalancing of their book. About 1% taking too many loans, then it would impact their CIBIL score. And most of the lenders, and you were talking about the fintechs, and because I happen to chair the board of RBI, which also facilitates small value loans, although our ticket size is not as small as below 50,000. But we facilitate a small ticket size loan to the SMEs, and which are otherwise not able to access the formal market, like banks or NBFCs. So fintechs have shown a certain way of that how do we handle these type of loans. And as I said, it is all about the business strategy. It's all about the capability to underwrite risk. It's about the capability to recover and have control over cash flows. And so if it is a well-thought strategy, then I think there is it is like any other lending business. And delinquencies in these type of loans are higher. But that's why the pricing of the loan is also higher. If you don't get at 9%, these type of loans you can't get below 22-24%.
That's true.
The other thing which I would like to mention here is that all these people today who are like being approached by fintechs or NBFCs, these are the people who also borrow in the informal or unorganized market. And that comes at a very, very high cost. It is difficult to even calculate that at what cost does it come. When they are in need, they will borrow, and it will be that you give me 1,000 rupees today, and after 15 days, I will give you 2,000 rupees. So this type of transaction, nobody even calculates that what is the cost of borrowing or lending in the informal market. So digitization and capability to use technology in analytics and so many other things in underwriting. So that is an enabler. So this is the push side. And on the demand side from the people, obviously, the country is growing at a good rate. So I call it a Americanization of personal loan markets in India. So that is what's happening. Earlier it was unthought of that people would borrow money. There was a certain hesitancy amongst Indians. Borrow money, but that's going on.
That I take your point, sir. Thank you very much for pointing out to this behavioral change in India and the fact that every institution should only enter where it is prepared with the skills to lend to that market. Thank you very much. We are out of time. But the main takeaway from our speakers has been that at the moment it is not a systemic problem. It is a small problem, and the Reserve Bank is right in forewarning that it doesn't get very big. We have to keep our eyes open on whether the guys who are borrowing 3-4 loans from various fintechs, don't start defaulting on their auto loan from a bank. So that's what the Reserve Bank is worried, that it doesn't expand. But I think all parties have been forewarned, so maybe it won't become that big a problem after all. Thank you very much for watching this special edition on unsecured debt.